Well, I'm back to give you your markets. While Asian stocks have been fairly resilient amid trade uncertainty today, they were on a downer with the star player of the week, Japan, reversing some of its major gains on the day. It appears that the tech stocks were a major drag today, although broadly speaking, emerging market currencies were seemingly firmer against a weaker dollar. The Nikkei share average declined by 1.45%. The Hang Seng Index lost 0.37%, while the Shanghai Composite Index fell by 0.46%. The Wall Street rally continued yesterday, this as investors continue to bet on lower US rates in the near future. And it's not only President Donald Trump who's been directing the US Fed to cut rates, but also US Treasury Secretary Scott Bessent, who's openly called for a 50 basis point cut in interest rates. The S&P 500 and NASDAQ posted fresh highs yet again. That's for 2 consecutive days. The Dow Jones Industrial Average rose by 1.04%. The S&P 500 gained 0.32%, while the NASDAQ Composite Index ended the session up 0.14%. Looking at local indicators, we see that the all-share index is currently down 0.5% at 101,758 index points. On the currency front, we see that the rand is trading at 17.57 against the US dollar, 20.52 vis-a-vis the euro, and 23.85 against the British pound, seeing a little bit of weakness there. Gold is trading at $3,355 an ounce, platinum at $1,343 an ounce, while Brent crude oil is trading just below $66 a barrel. All right, let's get into conversation now with Lindile Magas. He's an investment strategist at ABSA Investments. Thanks very much, Lindile, for joining us. So what's your reading of the markets today?
Yes, so certainly I think we are seeing weaker performance in the markets. So looking at our local markets, the all share is down about 0.5% so far. And I think it is understandable to see some profit taking, particularly given that the market is trading at all-time highs. So far today, what's driving that weakness has been mainly from resources. Those are down over 1% and predominantly being led by some of the gold miners. And those have also seen quite strong rallies since the start of the year. Then also some of the laggards coming from industrials, and that has been seeing some of the shares that have been having quite strong rallies, such as Naspers. Those are coming in a bit lower today. But then what has bucked the trend so far and what has been weaker throughout the year has been financials. So those seeing a bit of stronger performance today. And then not a lot of key catalysts coming out of the markets today. So we're seeing economic growth figures within the UK and Eurozone. So still seeing economic growth there, still being fairly weak. But what markets did like this week was from the US with the CPI numbers coming in line with the previous month, and also lower than what markets had anticipated. So that does raise the hopes of a interest rate cut from the next Fed meeting in September.
Yeah, and that helped to drive the dollar down. And we understand that it's still sort of on a weak tone at the moment, and that was beneficial for emerging market currencies. But as I've noted, I see that our local currency has lost, a few cents against major currencies. What's your view of how our local currency is performing, and to what extent is it also influenced by local factors?
Yes, so from a currency perspective, we do certainly think it's a combination of both local and global factors. On the local side, you are seeing the rand still trading a bit stronger on the year-to-date perspective, and this has been aided by stronger export earnings, particularly from a gold and platinum price point of view. Those have rallied quite extensively, and as a result, it has boosted the country's current account balance. And then on the global side, there has been a weaker dollar, and that has been fueled around the concerns from a trade policy perspective and the uncertainty around that. And we have seen some downward revisions from an economic growth, and also seeing that come against a backdrop of excessively high debt levels within the US. And that has predominantly led to a weaker dollar and boosted emerging market currencies, which has also boded well for the rand. And we do find these factors to continue to provide tailwinds over the short to medium term from a rand perspective. However, over the longer term, we still do expect the rand to depreciate against some of the developed currencies. And this is in line with what we're seeing from an interest rate differentials point of view.
So we were just in conversation with the Standard Bank CEO, Sim Shabalala, and of course their results, their half-year results came out today. They reported headline earnings per share up 10%, and they've increased the interim dividend, by the same margin. They're giving shareholders a gross dividend of R8.17 a share. I just wondered what you thought around their performance, compared to, say, Nedbank, which has already come out with their results.
Yes, so I think from a Standard Bank perspective, they've delivered pretty resilient results, particularly with a more constrained consumer environment. So to some of the points you've mentioned, you are seeing from the basic earnings per share and headline earnings per share, those are up by double digits. And it is supported by growth within a stronger balance sheet. You are also seeing quite robust growth from some of the fee and trading revenues that are coming from the investment banking franchises, particularly from an energy and infrastructure point of view, and also speaking to some of the cost controls that the company has put in place. You are seeing that the cost to income ratio, they were able to lower it to around 49.4%. And even from some of the return measures that are quite important when assessing some of these banks, you are seeing that return on equity continuing to expand, so coming in around 19.1%. The markets are certainly liking these results, so the share is up about 3% today. And year to date, it is one of the better performing banking shares, up around 12%.
So on the issue of DRD Gold, they came out with a voluntary trading update. They indicated that they expect earnings to rise between 64 and 74%. My very quick question to you as we run out of time is, what do you think of the gold stocks? Do you think that they're still worth investing in?
Yes, so we certainly think that there's still some bullishness on the gold price, and there's still some leverage expected to come.
Sorry, Lindile, as we are going to a breaking story. That was Lindile Malchas. He's an investment strategist at ABSA Investments.